Hey everyone, what's going on? It's Jason here. Today we're going over GME's earnings. They came out today. Also going how GME didn't have the greatest day today, but I think GME is going to pull it back together. If you could, make sure you guys hit the like button below. Not only does it help the channel and the video, but it also helps out with more people learning about GME and GameStop. If you're not a sub, make sure you guys hit the sub button below, and let's get right into it. If you're wondering what charting system I'm using here, I'm using Webull. There's a link down in the description. If you get 2 free stocks, you also get these tier 2 NASDAQ views for 3 months. You put $100 in. As you can see right here, we did start off pretty strong today going into the market hours, around $200. We went up to 201.75, but quickly got shot down from that 275. We headed all the way back down to around 185 today. We kind of went back and forth between 185, 195, right around 193 right here. We ended up shooting up to 193, but after that's about as high as we got from right there. There's a lot of resistance at 195. Going into power hour, we was about at 181. We did end the day at $181.75. When earnings came out, we got to $198.50. This was on CNBC. This is when CNBC was talking about it. You can see this big rush right here. But then right after that, we had the call. The earnings call happened, and then it kind of flushed out from there. We'll go out why it kind of flushed out and why I kind of think this right here. You can't really take this as a term as saying this is a dead stock or dead cat kind of play, right? Because this is after hours. You don't have all that volume you do during the day hours. This is after hours. Pre-market's usually even better, though I will say obviously sometimes you see a good uproar in aftermarket hours. Usually for me, when I see some good growth, it's usually we're going into the market hours, and then obviously market hours for GME. You don't have as much volume over here as you do right in here, right? There's a lot more volume here. So, having people sell off when they hear the earnings call and think everything's bad, I'm not going to worry about it, right? I'm not worrying about it. There's still another hour left in aftermarket trading. It looks like we pretty much hit a bottom right here at that 150. It looks like there's a pretty good support level right here at the 150. It's been staying at about 155 to 160 area. And as it looks like it's pretty much got a pretty good solid support line at 160 right now. Now, I did want to go over this real quick as well. So GameStop named an ex-Amazon fulfillment director as its new COO as the company continues its transformation under Chewy co-founder Ryan Cohen. So this is actually pretty good as well, man. They added an ex-Amazon fulfillment director as well, which is great, right? They're trying to move into a more digital space and a more online space. This is really, really good news. GameStop announced on Tuesday it has hired a tech industry veteran to join its executive team. Jenna Owens will be the company's new COO after spending 4 years at Amazon, according to her LinkedIn profile, and most recently serving as the director of Amazon's fulfillment operations. She also spent 4 years at Google and 5 months at an online clothing service, Rent. The news comes the day GameStop reported its fourth quarter earnings, and the first time since the company's stunning stock frenzy in January, and also a $215 million loss for fiscal 2020. GameStop stock has also had a rocky few months after online forum drove the company stock price to sky-high levels. The Webush said the stock's value is completely disconnected from fundamentals of the business. I think we've heard that a lot. Still don't think they get it. GameStop's appointment of Owens to the C-suite role marks yet another recruitment for Amazon's talent pool. In February, GameStop named Matt Francis as CTO after he spent some time as an engineer lead at Amazon Web Service and Amazon's cloud arm. And you can see how Amazon's going about this. They're trying to hire on people that know how to do with the online retail. GameStop also announced on Tuesday that it hired Nita Pacifico as the new senior vice president of e-commerce. Pacifico spent over 4 years at Amazon, per the press release, but most recently comes from the pet supply delivery company Chewy, where she served as vice president of e-commerce. So again, they're literally ramping up, getting ready for this e-commerce, which is great and really, really good for GameStop. Pacifico isn't the only Chewy alumni involved in the GameStop. Ryan Cohen co-founded the company and served as its CEO until 2018. Cohen is now the largest individual shareholder in GameStop and has joined the company's board of directors and is determined to steer the company into a new era of digital gaming, one in which it could rival Amazon. 2 other former Chewy executives, Alan Attell and Jim Grube, also sit on GameStop's board. Before the pandemic, GameStop has become a dying relic of the video game world as players turn to digital games instead of physical copies. But the pandemic gave the company a slight boost as people cut off traditional means of entertainment, sought ways to keep busy at home. So this is great news, right? So they're hiring on lots of people from Amazon, lots of people from Chewy's for the e-commerce business. And I think this right here is going to help GameStop's future stock price and the company stay alive as well. Now, I did want to go over, obviously, GameStop's fourth quarter fiscal 2020 results as well. So they had achieved a 6.5% increase in comparable store sales during fourth quarter, with global e-commerce sales increasing 175% for the fourth quarter and 191% for fiscal 2020. I do expect this to even rise more as they get this e-commerce rolling with the new people from Amazon and from Chewy's. Expense reduction initiatives drove $409 million or 21% SG&A improvement in fiscal 2020. Great news there as well. Strengthened the balance sheet and ended fiscal 2020 with $635 million in total cash, laying the foundation for the transformation. And announces appointment of technology veteran Jenna Owens as the new Chief Operating Officer, which we just went over again, and she's from Amazon. Fourth quarter fiscal 2020 overview. Comparable store sales increased 6.5%. Net sales were $2.122 billion compared to $2.194 billion in fiscal 2019 fourth quarter. But again, they did have a lot less operating costs, reflecting an operating environment that included a 12% decrease in the store base due to the company's strategic decentralization efforts and reduction of approximately 27% of Europe's store operating days during the quarter as a result from temporary store closures from the pandemic. Global e-commerce sales increased 175% and represent 34% of the net sales for the fiscal 2020 fourth quarter versus 12% of net sales from fiscal 2019. And as they get this thing ramped up, they went from 12% in 2019 to 34% in 2020. I think this is going to be even bigger for 2021. Gross margin was 21.1%, a decline of 610 basis points compared to the fiscal 2019 fourth quarter, reflecting an expedited mix shift towards lower margin console sales in response to the launch of Generation 9 consoles. Increased the freight and credit card fees associated with the shift to e-commerce sales and a broader promotional stance. Selling, general, and administrative expenses went from a $419.1 million, a decline of $92.6 million, and 18% of $511.7 million in the fiscal 2019 fourth quarter, driven by the company's cost optimization initiatives. Income tax expense was a benefit of $69.7 million due to the change in tax status of certain foreign entities and impact of the CARES Act, including tax benefits associated with availability of a 5-year carryback period for certain current tax losses, which compares to the income tax expense of $43.8 million in fiscal 2019 quarter. Net income was $80.5 million and $1.19 per diluted share on 67.8 million shares outstanding, including a $1.03 per share tax benefit as described above, as compared to diluted earnings per share of 32 cents in the fiscal 2019 fourth quarter. Adjusted net income was $90.7 million or $1.34 per diluted share, compared to adjusted net income of $83.8 million or $1.27 per diluted share in the prior year fourth quarter. So the fiscal 2020 had a comparable store sale decrease of 9.5%. Obviously, a lot of places were shut down. Net sales was $5.090 billion compared to $6.466 billion in fiscal 2019. Global e-commerce sales increased 191% for the fiscal year and presented nearly 30% of the net sales in the company. Gross margin was 24.7%, a decline in 480 basis points compared to a year prior. Selling and general and administration expenses were $1.514 billion compared to $1.923 billion from the year prior, a reduction in $408.5 million or 21.2% from the fiscal prior year. Net loss of $215 million or $3.31 per diluted share compared to a net loss of $470 $138.9 million or $5.38 per diluted share in the fiscal year. Adjusted net loss of $138.8 million or $2.14 per diluted share compared to an adjusted net income of $19.1 million or 0.22 diluted share in fiscal 2019. So they delivered $408.5 million or 21.2% reduction in SG&A expense in fiscal 2020 compared to the fiscal 2019, primarily driven by continued cost optimization initiatives. Strategically, decentralized the company's store base by closing a net 693 stores in fiscal 2020 while transferring sales to online platforms and neighboring locations. Achieved 30% decrease in inventory at fiscal year end, leading to an annualized inventory turns of 5.9 times as compared to 4.4 times in the prior year, a 10% decrease in accounts payable at the fiscal year end as compared to fiscal 2019. Ended fiscal 2020 with a $635 million of cash and restricted cash. Reduced overall debt by $57 million, including $125 million voluntary redemption of company's 6.75% senior notes due in 2021. Completed exchange offer and consent solicitation for $616.4 million of unsecured notes. Completed 5 sale leaseback transactions related to the office building and sale of the corporate travel asset, contributing to $95.5 million towards liquidity. Looking back at it right now, there was nothing big or nothing wrong in any of those things. I think the biggest thing that came out and said, they hired somebody else from Amazon, Jenna Owens, to head their COO, which is great, right? All these things, I think, are looking great. They're hiring people from Chewy's. They're hiring people from Amazon to get this e-commerce on the run, and I think that overall that's going to be great for GME. Now, what do I think about the GME stock? Right now, yes, it's down and hurting, right? We're at $158.85 in aftermarket hours, but again, we're in aftermarket. I can't really take that aftermarket or even pre-market as a market whole, because this is where all the volume's at. Once you drop off in after hours or pre-market hours, the volume is literally cut in into a fourth of what it is right here. So I think tomorrow we'll wait and see what happens. I think we'll come back up off this though. I don't think this is going to fall back down. But again, I'm just a nerd on the internet, and make sure you guys are doing your own D&D. You know, this is not financial advice. I'm just trying to bring you guys the news and hopefully bring you guys the best facts as I can. If you guys like this video, make sure you guys hit the like button below. Make sure you guys hit that sub button. Remember, there's also a link for the Discord. Go down there, man. Join the Discord. We have over 1,000 people in Discord. Love to have you guys be in Discord with the community. Also, there's a link down below for Patreon if you guys want to stay up to date on stocks, hidden stocks with a great value, and stay up to date with other things with GME and others. Hey, think about joining that as well. And I'll see you guys in the next video.